Hello traders, welcome to your daily market update for Tuesday the 21st of April 2015. And we didn't have a lot of price action overnight, but the Greek dramas continue to be in the headlines, and that weighed a little bit on the European currency, and it's going to, as I mentioned yesterday, weigh in a little bit more as Greece really comes to at the pointy end of business where they really need to come up with a deal that everybody's happy with. Otherwise, there is a possibility they will be kicked out of the EU. Whether that happens or not is a whole new level and a whole new game, but I think that the risks are certainly there, and the market is yet to really price in the enormity of that happening. So for now, people are on the side of not believing it's actually going to happen, like myself, but still fearful that it is a real possibility. So that really weighed down on the currency, and other than that, the US dollar did take a bounce, and that was the main driver of price action. We didn't have a lot of data, and the Bank of Canada's governor speech was pretty much on par with everything that we expected him to say. And he believes that the economy is going to turn around, but he has seen and does believe that the commodities boom and cycle has come to the end for the foreseeable future. So he is aware of that, and he is preparing for that. Yet he still remains quite bullish for the economy. So there was some positive things to be said there from him, and I think that the Canadian dollar will ultimately benefit from that in the future. As you can see, not a lot of other data of any importance, but today we had the RBA minutes, and the minutes come out and they really just added a bit of light onto why the RBA left rates on hold. And they still had a lot of negative things to say, and that's why the Australian dollar has drifted lower. It didn't fall because there was nothing in there that the market hasn't already expected or considered pricing in. So there was no surprise, and that's a good thing. The market will still anticipate further rate cuts, and we seen last night, actually, on Governor Stevens had a speech and a dinner in Australia, and he mentioned that he does foresee future rate cuts. And you've seen that the market moved quite heavily in the Australian dollar last night during the New York session, and that's due to his words. And the market was already starting to price in an interest rate cut. So what the minutes come out today were no surprise, and the move had already taken place. So moving into tonight, once again, it's a quiet night on the economic front. So we'll be back into headline driven about Greece and the US dollar index. Following that, we will have Wednesday where things really start to kick off. You'll start to see here we've got some UK data coming out. I think that'll remain unchanged there, so that's probably not the biggest event on the calendar, but we will have some other data starting to come out later in the week. But until the next video, the RBA CPI here is actually expected to get worse, and if so, or possibly even worse than that, 0.5, that will definitely weigh on the Australian dollar. We'll also take note of the consumer price index, as that's an indicator for inflation, and if that's expected to get worse as well. So we could see some weak data coming out of Australia tomorrow, and if that's the case in the morning before I produce the next video, keep an eye on the Australian dollar, as it could see some new price action move pushing it lower. Going to the dollar index, we'll have a look here. As you can see, we did have that bounce, and it looks like that momentum was substantial enough to carry through. And it's going to be interesting to see what happens when we push a little bit higher potentially in today's session. I don't expect massive currency moves during today. There isn't any data to really push the markets in massive movements. So I'll be looking to do the odd scalping and things like that, but I think the US dollar could maintain a little bit of support coming into today. If we have a look here at the price action, we'll have a look at the New Zealand daily chart, and as you can see here, we do have the bearish candle after we do have the hammer candle formation here. So I think that we will see the price action come down and test the 76-cent range at some point, and depending on what the Australian data comes out, that could also roll over into the New Zealand currency and affect that likewise. But for now, it looks like some bearish momentum has taken hold. The Australian dollar is very similar, but on a much larger scale. As you can see here, it's a perfect three-candle formation of a falling star, bullish, indecision, decision. it's pretty much textbook, and it means that we are looking for some lower price action on the Australian dollar. I believe that to be the case, and it could actually pick up momentum with tomorrow's CPI data and things like that. So keep an eye on the Australian dollar. Also, during that announcement, you might want to have a look at the Australian cross pair. So we could have a look at the Australian versus the Canadian dollar, because the Canadian dollar's quite bullish, and we'll see what happens from there. The euro dollar, let's have a look at that. As you can see, it's bearish as well. We are back below 108, and we do have an engulfing bear finished candle formation, so it does look like momentum is going to continue on to the downside. The Great British Pound versus the US, after this flame out that I spoke about yesterday, it does look like we did follow through, and we could see some lower prices as well, so keep an eye on the dollar index. I don't believe that the data coming through tomorrow is really going to add much else, and I think that overall the data coming out of the UK has been weak, and we should start to see that priced in. However, in this region here, between $1.48 and $1.49, you'll see that that is a consolidation area. It's an area where we do tend to get an equilibrium in the market, and it's quite possible that if we move back into that zone, that could happen again until we get something major from either the UK or the US. The Canadian dollar did have a bounce, as I mentioned, on a key reversal day, and it looks like we are going to come up and test the $1.23. After that, all bets are off, in my opinion, that we could actually, this could just be a short-term bounce, and momentum from the positive data that we had here and from the confirmation that they got from the governor's speech, I think that we will see a continued support for the Canadian dollar, which should send this pair lower, but it's all subject to the US dollar. If the US dollar continues to grind higher, it could be overwhelming for the Canadian dollar, and we could see this pair actually come up and test a little bit higher. So keep an eye on that, and the US dollar will dictate whether it can actually overpower the Canadian dollar here, and I'm just careful of short positions actually getting caught up in that. The US versus the Japanese yen, we do have a bounce here, and we are trading back above $1.19. This has been a major support area through here that I've mentioned many times. We are in a consolidation phase. So I've mentioned this, and it's just scalping for now. The US dollar versus the Japanese yen, I don't think we're going to see a breakout of this sideways consolidation pattern until we do get some confirmation from the Fed exactly when, or we get really close to seeing them say that yes, we're raising rates and it's going to be this month or next month. As soon as data becomes firmer and firmer to that, we will see that price action take place in both the bond market and the currency market. Well, that's it from me today. It's going to be a quiet session. Do some scalping. Don't get greedy. Don't hand back some profits. Due to the lack of economic data, I don't see the market going crazy. So just be happy with what the market can put on offer. Until tomorrow, trade well.